Well, hello everybody, welcome back to another trading routine session. My name is Alexander Nikitin. I'm a professional trader and a developer of pattern search software. And in today's video, I won't show you the whole routine of swing identification. I already have done my analysis. So the trades I have so far are as follows. The first trade is Euro dollar. It is a butterfly pattern running since last week, still valid. Okay, next pattern is dollar Canadian for our butterfly as well. The next one is Euro yen. Hopefully it goes here to the high and triggers my entry, but it is pretty far from completion. The next one is pound dollar. Didn't go to entry. If you use 90% rule, you should skip this pattern. But if it goes with my rules, my swing identification, it is okay. Okay, next trade is Aussie New Zealand. I entered very high with this pattern because when I just noticed that pattern, it was already running. But the pattern is valid for me yet. If you use the candle close invalidation, then it has the higher high and higher close above the X point. This may invalidate your pattern depending on your rules, depending on what you have backtested. Okay, Aussie Canadian is another trade. Butterfly is running, still have the secondary target, and the bet pattern is setting up. Let me go to my browser and let me go to my MyFXBook statements. Guys, you know from my previous videos that my statement coincides 827. It coincides with my MetaTrader statements, with my MetaTrader reports. I'm not making any fake statements on MyFXBook. I only use it for objective identification. The only thing here with MyFXBook is that it calculates 48%, you see, it calculates my zero trade or slightly zero trade, like negative 0.03, something like that, because of slippage. It calculates them as losers, and that's why I have that small accuracy. But in fact, if we go here to account, if we save it as detailed report and go to XLS, maybe I already done that, changes detail statement. Let me check it. Okay, potentially it should be this. Yes, I already have calculated this. So some zero trades, I had some zero trades, they should be break-even, but because of swap or because of some commissions, those trades were negative, and instead of winners, I had a loser, and this was actually a problem. So I have recalculated them. This is the amount of pips. This is the amount of pips turned into the amount that is needed. If you go to MyFXBook, if we look at the history, so pips, generated pips, minus 38.6, minus 36.7, and we will see minus 36.7, 80.1. So the next one is 80.1, 80.1. Although I was aiming with my stop loss 79.9, but because of slippage I had 80.1. You can see that, yes. Okay, take profit 40.9, and here we have 40.9. Yes, calculated pips. Minus 21.4, minus 21.4, so we have minus 21.4, minus 21.4. Then we have 16.5, 13.1, 16.5, 13.1, 13.1, 0.1 as well. So this, and here we have negative 0.1. This is what I was talking about. This is the break-even trade, actually. You see, the stop loss was aiming to have 0, not negative 0.1. This is the problem. The stop loss was aiming to have 0. Well, that's it about this calculations. Let's go next. What else? This is monthly performance, 40%, 44%, negative 17. Because of my aggressive money management, you can see that drawdown, you can see that choppy movement, and now instead of breaking to the upside, we broke to the downside, but that's okay, that's trading. It never goes always to the upside, still this okay. As for my money management, you should keep this in mind. Kelly position size calculation. Okay, how this money management is calculated? If you go here, I already calculated my win percentage. It is 48%, 58.42, and my average profitable trade is 46. Average losing trade is 41, and average risk to reward is 1.13. So based on these numbers, like this and this, based on these numbers, okay, so this Kelly percentage is calculated. So 58%, 113. If I don't want to risk more than 30%, then I am to multiply this by 30%. So you can see it is multiplied by this sell 2 D2 equals that it should be 30%. So I'm not using the full potential of my strategy, but I'm using only 1/3 of that potential, 1/3 of my strategy, not to risk more. But guys, you should keep in mind that this calculation, Kelly percent, is calculated for consecutive trades. This means you should have only one trade running. Before you open the next trade, you make sure that your first trade is closed, and then you open next trade, and then you open next trade, and then you open next trade. If you have on average 2 trades running at the same time, you should split this amount by 2, divided by 2. Let's say you have 3 trades running, divide them by 3. Let's say you have 6 trades running at the same time, divide by 6. So this way you will have the amount you need to risk in order not to hit the drawdown of 30%. So this is my calculation of this per the pattern. I'm saying that this should be 1%, 2%, 3% per pattern. And if you use 2 trade setting, like I use target 1, target 2, this means that it should be divided by 2 as well, split half, this half that. Hope you understand what I mean. Okay, I am pretty aggressive with that. I am not anyhow preoccupied if I lose all of my accounts, so I am risking all my money. I'm not anyhow limit myself with this 30% drawdown. That's why in a worst case scenario I can go as close to 0 as, let's say, 90% or something like this. That's why my risk is enormous. This is a testing account. I am testing doing some stressing on this account to see how it survives. That's why it has this drawdowns, it has these choppy movements. And so if we compare that my account with Scott Carney account, here it is, Scott Carney. I've seen his account in his video, and he was sharing his this link. So if you wish that link, it is this: MyFX Book members, HT113 harmonic dash trading 2261054. So this is the Scott Carney account Okay, he also is running it for demonstration of his strategy. Look at how similar they are. Some drawdown, then we had breakthrough to the upside, then we had sideways, and then we have drawdown back. And the same thing here. Drawdown, then we have breaking through, then we have sideways, and then we are moving back. Scott Carney is implementing better trade management that is not that good with advanced patterns. Okay, if you don't know what is this, I will explain it to you on this Aussie Canadian trade. Let's say that Aussie Canadian trade. Let me explain it this way. Okay, once we entered here, yes, we then stretch our Fibonacci and we then calculate our target 1 and target 2. Here it is, the butterfly formation. Target 1 was hit, we close the half position and break even the rest, yes, and after that we just wait in. If price hits the take profit, or it goes back and hits the break even. You see that? If price hits take profit, or it goes back and hits break even. Scott Carney doesn't do it this way. After the first target is hit, okay, he closes half and break evens the position, and he has his trend line, 45-degree primary trend line and acceleration trend line. Okay, once he has this 1, 2, 3 movement, if the 45 degree is broken, he closes that slightly positive, the second target. If he has it this way, we have a second high that is higher than previous high. It means that we have a kind of trend, you can see. Then we have another touch of the trend line, but then we fail to install a higher high, and he makes a decision to close the position at the break of that trend line. Whenever the trend line is broken, he closes his second half. So instead of having 0 or slightly negatives than 0 that I have, he has that winner that is actually more than the first target. That's why if we go to his strategy report, I will have the profitability of 60%. You can see that 60%, not 48, because he doesn't have those zeros that may be calculated as losers. But I do have zeros that are calculated as losers. That's why I have 48, and I need some adjustment within the Excel spreadsheet. Okay, so right now what I am working at, I am doing the backtesting, trying to implement this way of management within the advanced patterns, and I have some contradictory results. That's why I'm not using it. With some patterns it works, with some pairs it works pretty well. Second target management is pretty good. You can close that at trend line break, but with others you filter more winners. You just close it earlier than it actually is. It then goes and reverses and hits the second target, but you close that earlier. So there are some contradictory results. When I get more data, I will make up my mind. I will make a decision whether it is more profitable to use this way or that way. Okay, so hope you understood that, my thoughts. Well, that's it. Updated 17 minutes ago. And where was my updated? It was 1 hour ago. It doesn't matter because nothing changed. That's it about this results. Look at this, absolutely different patterns, but similar performance, drawdown, and that. This doesn't mean that we trade the same pattern. We don't trade the same patterns, but the results are that. Strictly saying, the harmonic patterns just not performing good these times. They are moving sideways, so they just don't perform good. Okay, hope you like this video. Hope you find it informative, useful. If so, give me a thumbs up, share this video on social media. Until then, good luck, good trading, hope to see you soon.